is a venture capital firm led by McLean Palmer and Associates with 57 years of operating experience and 17 years of investing experience. Palmer assembled a team from diverse backgrounds to take advantage of the strong capital market. While previously they may have been looking to invest in minority entrepreneurs, they decided that their best strategy was to invest in companies, minority-led or not, and capitalize on their minority network and knowledge of the minority marketplace with management-centric strategy. Now, what exactly is a venture capital firm, and how does it work? I'm going to explain on this diagram real quick. So we're going to start with a general partner. General partner is comprised of principals, who then manage this fund. They put in some of their own money, but most of the fund comes from outside investors, called limited partners. Limited partners start with the gatekeeper, which is the largest and most influential first. Then this gatekeeper opens the door for other institutional investors. Institutional investors with less experience in investing may seek advice from the gatekeeper. These investors put money into this fund, and the general partner then puts the fund and invests in portfolio companies. They also put in their management and strategy and obtain partial to majority ownership through equity. They manage these portfolio companies for increased profit and growth, and the return on this investment is distributed back to the general partner and the limited partner through an 80-20 rule, which means that the general partner receives 20% and the limited partner receives 80%, depending on how it's been invested. Now, how does this apply to Forte Ventures? They have a committed gatekeeper, Growth Street Advisors, who supports their strategy and sees the competitive edge that it can provide. GSA pledges up to a total of $25 million to Forte Ventures, with $10 million upfront and the other $15 million upon reaching $50 million from other investors. To reach the $50 million milestone and a goal of raising funds of a total of $200 million, Forte Ventures is seeking limited partners. To gain these limited partners, Forte Ventures is offering the following. They will focus on wealth creation through a twofold strategy of supporting and recruiting high-quality management teams and acquiring or investing in sound companies. The investment opportunities Forte Ventures will participate in are leverage buyouts, recapitalizations, growth capital investments, and industry consolidations and build-ups. The team of principals will draw on their extensive network for sourcing and developing potential transactions and identifying and recruiting management teams while using their knowledge of many different industries, including telecommunications, manufacturing, and heavy industries, as well as their operational capabilities. These capabilities come from the experiences that the principals have. For distribution of return on investment, they will follow the 80-20 rule, with the limited partner receiving 80% and the general partner receiving the remaining 20%. Now this offering may sound great, but at the start of 2001, Forte Ventures faced a large hurdle. Video.
It's terrible.
To here.
It's a great time to do it.
Video. Great time to invest. Economic and environmental conditions were favorable when Palmer and the other principals were drafting their strategy and offer. They were committed to the partnership and moved to Boston in 2000 with anticipation of success. However, as you saw, the internet bubble burst and the economy slowed way down. The S&P was down over 25%, the IPO market had dried up, and overall, the outlook for venture fundraising was very poor. Specifically, the pension fund managers that Forte Ventures was hoping to target for limited partners had drastically reduced investment in venture capital. Also, in such uncertain and depressed economic time, they were unwilling to take a risk on a new private equity fund. In this extremely risk-averse economic environment, Forte Ventures was struggling to gain investors. The timing of this partnership was inopportune. This is a strong external factor that must be kept in mind, but we can't advise them to fix the economy. So we also examine structural problems that they can't control. They have a lack of focus on industry. Specifically, we noticed that the offering stated many different industries where the principals had experience, but this did not match the specific industries that they've shown returns in. Another disconnected area was the language used throughout the memo about a minority focus. This leads to questions about the true strategy being used and creates perceptions of lessening the focus on creation of wealth. There's also a perception that the team is inexperienced due to their lack of a proven track record. While the individual principals may have experience, only Pierce and Palmer have closed deals, and explanations of the other principals' experience is less convincing. My colleague Andrew will now walk you through our plan for solving these problems. Andrew?
Thank you, Kelsey. So as Kelsey mentioned, Forte Ventures is facing a lot of problems. So we decided to form criteria in order to tackle each individual problem. They need a clear mission and vision. They must convey how they will differentiate themselves and capitalize on their strengths to potential investors. Which brings me to my second point. They need to expand their investor network. Being well short of their $200 million goal, they must reach out to additional sources of funding. And finally, they need to narrow in their industry focus. Although having operational experience in a vast number of industries, they need to focus on the industries in which they have had previous success. So based on this economic environment, Forte Ventures is left with a few options. They can start a social venture fund, which would better match the perception of their mission and vision that they had began initially, which was to help the minority marketplace. So what is a social venture fund? And how does it differ from traditional venture capital? The answer is that a social venture fund seeks to invest in social enterprises in order to obtain a risk-adjusted return, as well as finding these enterprises that are trying to make an impact on the world. This option aligns with their initial concept and satisfies a few criteria, but it would require a huge structural overhaul. And even after converting to this, they would lose their competitive edge. Also, they can continue with their current plan and develop a marketing strategy to better communicate what their competitive advantages are. Forte Ventures has failed to establish a brand thus far that communicates clearly how they will capitalize on their capabilities. And finally, with the economic environment as it is, they can minimize their losses and discontinue fundraising. With a downturn in the capital market, this is certainly an option that should be considered. But Narwhal Consulting never says quit. We propose that Forte Ventures continues with their current plan, but develops a marketing strategy in order to better communicate what their competitive advantages and strengths are. So based on previous experiences, they should narrow their industry focus on telecommunications, business-to-business services, and heavy industry manufacturing. Also, they need to leverage their extensive minority network. This is for 3 reasons. There is an increase in profit and loss experience amongst minority managers. The number of minority-led companies with excess revenues of $10 million has increased substantially. And also, Forte Ventures needs to tap into a growing minority marketplace in terms of purchasing power. So their mission would be create risk-adjusted returns for their limited partners by capitalizing on their operational capabilities and leveraging their minority market. Their vision would be create long-term adjusted returns, risk-adjusted returns, by utilizing their 4 main investment tools. Forte Ventures needs to focus more on creating high returns and less on social responsibility. That's why we propose that Forte Ventures changes their segmentation strategy by reaching out to corporate investors and hedge funds. The reason is because these 2 groups tend to be less risk-averse and more knowledgeable of these industries. And finally, being in New England, Forte Ventures will be close to the portfolio companies in which they want to invest in, as well as the giant corporate investors and hedge funds that they seek out to be limited partners. This would be beneficial for all 3 parties, as it would allow the limited partners and general partners to monitor their investments to ensure that operations are running smoothly. So what did we learn today? Well, first is that venture capital companies must not limit their scope of who they seek out to be their limited partners. Also, it is crucial to establish a marketing strategy when trying to develop a fund of this size. And finally, timing is essential. When they started this fund, the market was buoyant and the internet bubble was whole. But now that bubble has burst, and Forte Ventures must adapt to an ever-changing environment. Thank you for your time, and we'd be happy to take your questions. Any other question? Any other question?
11 minutes.
11?
Jay.
That opens up some time for
Yeah,
questions.
you guys are still fast.
Yeah.
Like you gotta,
All right.
you gotta have some pause in there.